Welcome back, welcome back, welcome back. Welcome back, welcome back. Hey, cue that wind effect. Stop playing with these folks. Come on in. Come on in. Y'all know what time it is. Run it back. Listen, hey, I hope everybody had a great weekend for a good Mother's Day weekend. I had a good weekend. It was great being able to tap out of the stresses of financial markets, financial freedom, and what's going on for a little small break. But here we are back into it, guys. Our week starts again. Like I said, this is going to be one of those action-packed weeks, not only just for our AMC stock and our retail stocks, but also the entire market. We're going to start off here. I got some keynotes that I want to tap in on AMC just as a to add together what I believe the price action is going to be for this upcoming week and forward moving. But we got a quick clip here we're going to review. They were talking about Walmart, Home Depot's earnings, Tesla's annual meeting, and then the debt ceiling. Like I said, guys, we got a lot of, don't it just seem like this is like a movie? This is non-stop right now. This is just insanity blowing out. But like I said, this is how we stay ahead of the game. And this is why we are going to be the select people in the financial future of being able to have longevity, yachts with a couple thoughts. You hear me? That's all that we're trying to set up for. But nonetheless, let's tap down into it. Let's get down to it, baby. Yes, sir.
To the floor show. Our traders, we have Carnivores, Dutch Masters, and Bullseye Options, Alan Nuckman. And as we mentioned, standing by to tackle Disney, Needham, senior internet and media analyst Laura Martin. Dutch, I begin with you. The regional banking ETFs are hitting 1 week lows. The KRE, KBW, et cetera. That speaks volumes because 1 week ago, PacWest and Western Alliance were getting killed on those reports. They were exploring, strategic options to stay above water. Dutch, what has to happen before this is over and stops affecting the broader market?
Well, I think that, my message is that this too shall pass.
His name fits his persona. He definitely looks like Dutch.
Quite a bit because they are a conservatively run outfit.
Red Dead Redemption character.
They do a lot of SBA loans, so they're not taking a lot of risk with their balance sheet. They're not making sort of Silicon Valley type, loans. They have 11 states that they're in the Western United States. I think for this to pass, we do need to have somebody stabilize things, and the FDIC approval proposal is out there, and it's something that I know that you've been discussing. And I'm a free market guy, so I believe that making stupid decisions should have some consequences. However, I also don't think that a company that's sitting with $1 billion or $2 billion or $3 billion in cash at a bank should be punished for that stupidity as well. It's certainly not theirs.
Well, I do. An opportunity.
I do. Hey, you made an investment. As an investor, you didn't check in. Hey, y'all are letting retail get smacked down, and we can't change anything. You got billions of dollars into this company. You basically are a part owner of something like with such a massive holding in there. For you to not have that understanding what's going on, no, you knew what was happening. You just wanted to play into that risk, and you're getting burned. No handouts, no freebies. They need to experience the same way we do. No. Banks need to be short sold to the floor the same way, and it shouldn't be a bailout. Nobody's bailing me out. Nobody's bailing you out. So why are they getting a bailout with more money and better, not even financial understanding? They are market makers. How did you get caught up in your own game and lose? Then you want to bail out from the people that you are fighting against. This is the craziest thing I've ever seen in my life.
I want to bring Alan Nuckman in
Smoke
here.
Em.
Alan, you have been
Smoke
on those
'em.
trading floors at times like this. Talk to us right now about what you would be doing at the moment when it comes to whether it's buying the S&P, selling the S&P. You tell me.
Well, first, to get to the banks, all right, few bad banks, they broke. It's capitalism. Unfortunately, they didn't understand how to hedge, and they didn't understand their customer base. So it's a velocity of money story. So I don't think it's a systemic issue at all. I think there's huge opportunities. You talked about the regional bank indexes, 147 banks. I'm an options trader. I would buy options.
It's like 100 and some banks in danger, guys. These small banks are about to get eradicated. This is all a bigger ploy for bigger banks to consolidate down for these little small outside, because believe it or not, these little credit unions, I know that, I get a better interest rate because you're assuming more risk. But they're about to acknowledge that nobody even really goes and runs into banks now. I mean, there's so many different ways. You don't have to even go. You're going to deposit your check from on your phone. I mean, they don't hold the same value as they did back in 1930 when it was like, no, this is our community bank. Hey, this is Sharon the banker. I bet you don't even know your banker name if they had a name tag on. I mean, this is it's not a systemic issue. This is what they call progressing to what they want, which is centralizing everything. Hence why, let me hit them with it. The time is now, people be buying XRP, Bitcoin, Tesla, Nvidia, Microsoft, H-bar. Y'all know what time it is. You're seeing the things employed in front of you. The time is now for these things. Don't be behind, miss on the boat. And like I said, y'all go check out the link in the description. Go look at the Ballot Cold Storage wallet. $35. Start your crypto building. $10, $20, $30, $4 a week if that's what it is for you. But understand, you need to be venturing off on this. And what I'm about to start doing is I'm gonna pick up a couple gold stocks in my portfolio, and then I'm about to start also, like I said, capitalizing on buying that gold as well in person. Because like I said, what we're doing right now is you are your hedge fund. We don't know what the hell America's gonna be, or not even just America, the global economy is gonna come to in the next 10 to 15 years at this rate. But you need to hedge. You need to have a little bit of your hands in everything and be there before the game comes. You don't want to catch it later. You don't want to catch Bitcoin 50,000. You want to catch XRP when it's at 10,000 climbing. You want to catch it now.
3
Get
to
in
6
there.
months out.
It's my money, and I want it now.
The PE is 7. They've dropped 40% compared to the XLF, which has only dropped 15%. So,
which is the big financial.
XLM.
So it's a risk-reward play. But in the big picture, I think it's all about the NASDAQ. You led with Google. Google's positive. Google's breaking out. Now, Google's starting to play ball just like Meta, just like Apple. They had huge recoveries. Nobody wanted to buy them. And now they're looking good. But you can see the NASDAQ, the NDX is actually making new 8-month highs continually almost every day.
I'm seeing a whole lot of
Tech
red for
has
you to be talking about how
turned,
good
and I think
everything's
that's a very
going.
healthy sign that we could see the S&P break out of the range that we're currently in. There's a lot of price positives. 2023 has been nothing but positive, except for the dollar down, interest rates down, inflation down,
And the regional
VIX
banks
down.
are
You see how he had to start smiling? You sound stupid. They don't even believe this stuff they're saying.
nuts? What
Well,
do
the
you mean
regional
nothing but
banks,
positive?
unfortunately,
And
nobody's...
the S&P is
Hey,
flat?
everything's fine
the
except
S&P has
everything's not
bounced
fine.
15% off the October lows, but the
Okay.
regional banks, nobody's actually lost money on their deposits. It's an unfortunate situation for the shareholders that we've seen this, but the situation is this: they were poorly run, and like the Dutch said, they should not be rewarded for not hedging. It's not hard. That's what they got trading floors for, is to hedge their risk, and they chose not to. They suffer the consequences.
Dutch
Smoke the whole thing.
Suddenly, when you throw that term AI or artificial intelligence around,
Here we
you
go.
get a pop like what Google is doing.
Tesla.
That's all very
Right.
nice. I've seen that movie before where people threw in a
Microsoft,
crypto
Nvidia.
prospect. Or remember, we're adding .com to the name
Apple.
of our company.
Marijuana stocks.
Yeah, or exactly. Or fintech.
No, Alan's dead right. Tech has bottomed. We love tech right here. We
you
think
go.
they've done the hard work. They've been blasted. They've laid off the people. We think that we could be
Elon,
seeing a slingshot in tech.
take
and
me
since
there.
Tech is 25% of the S&P 500. It's going to drag that up too.
How do you play tech, Dutch?
We are long TECL and TQQQ right now.
TQQQ. So I'm imagining that's one of those Direxion type of things where you get the triple or double the move every time if you're long.
Yeah, well, carnivore never goes halfway, right?
I know. That's why you're a meat eater, right? Alan, we got
Pause.
the PPI.
Right.
Okay. This is inflation at the manufacturing level. It was very tame. It was either a match or slower than expected. That is all good news, is it not?
And yes, and I'm not a thinker. I'm a trader. I trade what I see. Okay. And what do
TQQ,
you see?
$29.
You see the
This
market's
is
telling
another
us
thing that y'all might wanna
we're
know
done
in
with the
here.
rate hike cycle, so we can put that behind us. And the best part of this,
Get your
it's not what the
exposure.
market did necessarily; it's what it didn't do. We had rates go from 0 to 5%, and the market is still within striking distance of the all-time highs. And a recovery. And every time in history that we've sold off, we've filled the gaps up above, and there's one up in the S&P at 42.18. So there's a lot of positives. to look at.
Retail names are all reporting next week. You got
That's
to
the
pick here?
end of earnings season. Earnings season's come out better than we expected, and we've actually seen revenue growth. It's called pricing power. People have wages.
Pricing power, what
and,
I say.
and inflation are equal now, so nobody feels it and nobody likes it, but that's very much a
What are you
positive.
picking?
Walmart is got earnings come out next week. They have recovered all of their losses from that big dramatic sell-off when we were expecting a recession, and they're set up for a V recovery for a technical target at 200, which is about another 30% higher. You've got earnings coming out. They're expecting about a 4% earnings.
Irregardless, guys, just don't be a fool. Just know this. Now, again, anything can happen, but America ain't going nowhere. America's not going anywhere. We're having a generational wealth transfer. Don't get caught up in this. Oh, I'm gonna wait for it to. I've been buying dollar cost averaging these companies that I keep screaming every single video, because watch how they're gonna be this thing, and it's gonna whoosh. And you be like, what the? Wait a minute. When Tesla's up at 1,000, they talking about another stock split again. Don't look back and be like, damn, I should have picked up Tesla when it was at 160. When Tesla blow to 2,000, that's a stock split. Now it's 500 a share. You had to buy. Don't the time is now, especially even in these retail things, and don't just jump into any retail, but like big names, Amazon. We're getting more and more to people don't nobody like going to the pay extra money at a retail store when you can have it in 2 days or 1 day for the cheapest price. Nobody's doing that. You're not going, oh yeah, let me go buy my furniture from Ashley Furniture and get my head blown off. No, you're gonna go in and get you an easily set 30% the cost and have it there tomorrow. These are things that you're watching. These are our ways of life.
They're blazing the way as far as a barometer. That's very positive.
Are you doubling down, Dutch, on retail? Yes or no? We got to run.
Yeah.
Options. Use options, Dutch, instead of those 3 times ETFs. That's just me.
I know. I love Alan, man. He's great.
Yeah, well, you both are, and thank you so much. It's great to have you. Now let's get to Needham's Laura Martin, because, Laura, I am looking at Disney right now, down 8.7% at $92.34. Low of the session was 91. The annual high, 126. Let's get to the heart of the matter. Disney reported that total subs of their flagship Disney Plus service dropped by 4 million to 157.8 million in Q2.
Disney on Bud Light, playing around.
How worried are you about that?
When companies become political.
Not that worried. I think the bigger problem is that linear TV networks lost a third of its total operating income. That's the ESPN and O&Os, owned and operated stations. That's actually what's pulling down the profitability, and I think that's what's pulling down the stock. They are narrowing the losses in streaming. They did better by 400 million lower loss this quarter than last quarter, and 400 million lower losses on streaming than before. And that's what the market wants to see. They want to see more profitability from streaming. So I think it's the linear losses.
I did not know ESPN was affiliated with Disney.
Here is Bob Iger's comment, and we went through with a fine-tooth comb his earnings
thought people were gobbling sports up.
Why he says he was totally fine almost with these subs losses. And we picked out this sentence. We thought our viewers needed to hear it. I'll let you parse it afterward. Here's Bob Iger.
We were pleasantly surprised that the loss of subs due to what was a substantial increase in pricing for the non-ad supported Disney Plus product was de minimis. There was some loss, but it was relatively small. That leads us to believe that we, in fact, have pricing elasticity. With that in mind, I think one of the things that we not only have discovered, but that we believe we have to do is that we've got to widen the delta between the ad-free service and the non-ad supported service, because we clearly would like to drive more subs to the ad-supported service.
Laura, most of the defections, and I think what he's trying to say is that they came from these sort of El Cheapo subscribers, and that would be Hotstar in India. And once the cricket tournaments are over, they end, right? So they leave. But 300,000 U.S. and Canada Disney Plus subscribers fell. Will that go even higher?
What just occurred? What just occurred? What just occurred?
Now this is another
Fox! Ah! All right.
Away we go.
1 second, people. Y'all just really want to try to steal some ad in there. All right. All right. I'm going to let you run it this one time. I'll get my source from somewhere else, Fox. Don't play with me.
Get used to this. The best way to see the world
This man off my screen.
with travel upgrades and private events from Chase Sapphire Reserve. Chase, make more of what's yours.
Let's get right to the floor show. Our
That's where we're
trader
at.
Quarter than last quarter, and 400 million.
But here is Bob Iger's comment, and we went through with a fine-tooth comb his earnings call on exactly why he says he was totally fine almost with these subs losses. And we picked out this sentence. We thought our viewers needed to hear it. I'll let you parse it afterward. Here's Bob Iger.
We were were pleasantly surprised that non-ad supported, that we in fact have pricing less between the ad non-ad supported service.
El Cheapo subscribers, and that would be Hotstar in India. And once the cricket tournaments are over, they end, right? So they leave. But 300,000 U.S. and Canada Disney Plus subscribers fell. Will that go even higher next quarter, current quarter? What do you think?
Yeah, I think what he's saying is, do you remember when they introduced the ad-driven tier, they priced it at the old price of like $6.99, and then they took the ad-free tier up like 30%. And what he's saying is that huge price increase of 30% did not lower their ad-free subscriptions. So he's going to raise that price again and widen the delta, meaning he's going to leave the ad-driven price at $6.99. He's going to take up the ad-free. Why? Because he's making more money on the advertising-driven tier.
Why not? And you say, though, that at the moment it's not going to be a winning year, I don't know what, for Disney, unless they merge with Apple. Really? Do you really think that's a possibility?
You know, good question. I think Apple has to decide first that they need to get serious.
XRP, Apple, Tesla, NVIDIA, Hey, I'm gonna keep screaming it. Y'all, you know the countries that you, I mean, not the countries, the companies that you need to be playing with.
I think Disney still is in a leadership.
Put them off in a second portfolio.
He's doing a
your
great
long-term
job,
portfolio.
You know, they brought him back. He has a
you got your one for your day trades, your AMC, your swing trades.
So I think they have a leadership problem after Bob's contract ends.
Yeah.
And I think Apple buying it would solve that problem.
Yeah. Well, Laura, you got to
be in the Apple car. All right, guys, this is
each step of the way.
I can't make you see it. I can't make you see
some
it.
Strong parts
All I
of
can
the
do is
business,
bring the
and
news.
He's going to merge Disney Plus with Hulu. That's going to be very interesting too. So thank you so much.
Hey, Hulu might get me then if they're gonna do a little bundle action now. That's what I'm talking about. You talking my language, you throw a little, you put a little thing together for me. All right, people, double tapping in. Let's get down to this so everybody can get ready for this week ahead. As everybody knows, our max pain level was $6, and you can clearly see they did all the accruing of building up all those fake synthetic shares, the millions of shares that appeared up, and you a fool if you think that those somehow just magically shot up. But I'm going to show you even more foolish nonsense that occurred over this weekend. Guys, all this was non-real sell-off. No retail shareholders were selling off on this. Look at you barcoded down. They were short, then algo. Short, then just sit in the barcode. Short, I've been through this a million times. It's nonsensical. We're looking at this 516 kilo, but like I said, guys, this is irrelevant. This is all irrelevant price movement because they're not even going, they're not going to be following the technical analysis charts. Of course, we like to sit here so we can kind of have an idea what the overview is. It's still respecting those levels as far as at 516, which I've always stuck to. 516, and like I said, being above 516, this is no man's land up to 640. So all this is still just irrelevant. We put these up here just so we can kind of see how it's bouncing, but these are not real levels of support and resistance. That was all, false movement. Double tapping in, guys. We were at 6 days. Now look at this here. Days to cover now rising back up again. 8.34 days to cover with a 25.95% going to 26% short interest. Now tell me this. This is the funniest part about it. 61% of the volume on Friday was going on dark pools. So now here we are tickling back up. So short interest is going up. Days to cover is going up. The trading off exchange in the dark pool is going up, right? But here we are magically 750,000 shares at a 92.2% cost to borrow. Now, hey, maybe I'm dumb. Maybe I'm dumb. But somebody in the comments tell me how this could make sense. You had 2 million, 3 million shares available Thursday and Friday at 180%. But now you have less shares. Y'all shot all the way through those short and through. But now you have less shares after you use them up. And the cost of borrow is lower. Let me bring y'all along with some here. Y'all, I'm going to let y'all make y'all own decision here. I don't know if y'all have heard about it, but discrepancies again. Put them up, the real numbers. We don't call them glitches. The real numbers are being shown on Market Watch, Fintel. But look at this here. Under your 8, right, you'll see that the shares outstanding is 937.94 million. Scrolling over, let's go back over here. I think it's this way. Scrolling over, the shares on float is 971.143 million. If you bring this over, because again, now you can't have a shares outstanding and a difference of your shares outstanding can't be above your share float. You can't have, hello, synthetic. You can. It's called naked short selling, right? It's called synthetics. But you can't have a float. This is the amount. You can't be above that outstanding, right? Clear as day. This is the number difference. You got 971 over here. That's your float. The outstanding is 937 million. That's 33 million apes alone that have just popped up. If you're not understanding arbitrage, not understanding how this is playing, this all correlates to go and show you this is nonsensical. But one thing I do know is, coming on down here, Bank of America, as well as a couple of other institutions, have now increased their AMC positions, their call positions. Let's see here. Yeah, have increased the AMC call positions. So whilst we've been getting, again, we are breaking up, but it's at 6. And of course, as soon as we hit that 6, they blow everything they've got from on the 5th all the way through. They've been blowing all their money to hold us up under that 6 level, just so you can see how max pain it actually is, right? Because if it wasn't 8, run up to 9 and smash it back down, right? No, max pain is 6. The max pain level has been coming down to a steadily month over month coming down. But now we're coming to points where you're seeing institutions picking up. Remember that in New Jersey, that pension picked up. You got big money that's loading up on this, guys. There's movement that's come on. This is oversold. They can't continue. They have to let the pressure out. It's not an if, it's a when. You've got until June 29th. There's no way. There's no way. There's movement coming. There's price action coming here. And that's what I want to tap in. I was like, this is blatant. This is almost hysterical now to watch. Numbers are popping out. It's sitting up here like, just imagine somebody like Pinocchio sitting up there lying and his nose growing, but he's sitting up there saying you ain't lying. Like, we're seeing what's going on here, dude. It's like, hey, guys, I don't want us to get overexcited. I don't want us to get overpumped. Everybody keep your head on a swivel. Be prepared. This next week is going to be one of wildness. It's going to be radical movements through all stocks. Hold yourself careful in your retail plays. All of our day trades, swing trades daily. It's getting crazy out here. It's getting insane out here. But nonetheless, one thing I do know is that if you're involved in these type of plays, you're one step above the mass majority of people. What we're doing is you have to keep progressing your influence, keep progressing your financial intelligence and what you're learning. Like I said, this is one thing I love, and I'm so glad for y'all. I much love to the family. I love that y'all are giving me the support and the ability to actually bring my part. But I love how, as a community, we can go from YouTube channels, you can build, you're getting your info and things like this, and we're becoming more and more informed and getting better equipped to be able to deal with this type of nonsense. But like I said, you've got to be here, keep yourself in check. But again, at this point, you don't really have to say it because everybody is riding at this point now, except for the few people that jump in the chat crying because they lost. Yeah, you're still talking about AMC. Yeah, idiot, because we're trying to run money up. Take your sorry ass over there, man. Go over to that channel. One dude, oh, you're still hopium. Hey, guy, I'm just reporting the numbers here. Whoever that was. But then also one thing I want to add in, guys, before we take it out. Hear me. That one is scat. Hear me. Before we take it out here, I want to start, because again, like I said, this is just beginning the channel. Like I said, I'm about to get ready to make a move here and have a little bit more space to kind of make a full setup here. But going to like the final form of our channel, I want y'all to start. If y'all have any questions over stocks, things like that, put down in the comments things as far as like stock, retail stock plays or stock, not even just, it doesn't necessarily have to be retail stock plays. Any stock plays of the future, things that y'all pick up like, hey, this might be a good move for the family to hear about. And we're going to go over it and we'll check it out if it's talking about something. But like I said, guys, much love, much support. Hold it down. Don't forget, go check that description out. Start your crypto building now. Do not be late to this party. You were supposed to have been in there now, but you're still at this price range, because I started buying in when it was around like 28, 29. Right? So we're sitting at 40, but this is still nothing. I've seen the price run up to, I think it was like 55 or 60 cents we were at one point. This is nothing. This is nothing compared to where XRP is going to go. You got to fight. You got to move, and that's the new stock market. There's going to be a Tesla coin. There's going to be an Apple coin that's going to come. I'm telling you how this is going to, the markets are going to move. But we've got to be ahead of this, and we need everybody there. So that's why it's pivotal for you to do your part to make sure that you are learning and actually not just talking about it, but actually making your active motions to keep your boat afloat. Because like I said, the more people we have 3.8 million calculated shareholders at AMC alone. Imagine how many retails that are all spread about in different plays and things like this. Once things loosen up and we get free from whichever direction they try to go with AMC, because at the end of the day, people just need to be loosened up from this. I will never be holding a momentum trade past 6 months or a year. I would never. But that was a lesson we had to learn, right? That's for my long-term account. But still, I would not. It sounds crazy, but I wouldn't undo it, because the information that I've learned, how it forced me to have to actually get in here and learn. You paid your tuition, just like college. But like I tell everybody, no knock to it, but hey, that college degree I got, once you get out of it, you're like, what the hell did I just do the last 5 years? What the hell was that for? You know what I'm saying? You come up, they didn't teach you nothing. They didn't teach you nothing about how to get the yacht with the thoughts. They just taught you how to be a worker. I'm a workhorse, but I'm not a worker. Those are two different things. I pioneer my own future, and that's what we're doing here. And that's one, why I'm proud of y'all. Two, why I love y'all. Much love, more support. We're gonna be bringing in bangers in all through the week. Y'all get ready. Hold your nuts. Hold your nuts. I'm telling you, this week is going to be one crazy. I feel it. And just about the dynamics, how things going on, we got the debts and all that. It's going to be all through the market. Watch yourself. Watch your accounts protected. Don't make rash decisions. Hey, baby, y'all hold it down. Much love, and until next video. Yes, sir.